Hi guys, welcome back to the channel. Today we are going to be doing a simple strategy called trend line breaks. And a trend line break, believe it or not, is when you break the trend line. So all you are looking for is a minimum of 2 points of contact, 2 points of interest. So little example here. So as we've come down the market, we're below the EMA. This is a 50 EMA. It's then pulled up, come back down. So we've gone all the way to the low. It's now created a lower high. Then it started to go higher low, all the way back up again. So we are going to go from the lowest point to the next point. So if you draw up 2 points like this, okay, so where is my circle to make life easier to show you? Oh my gosh, I've lost it. There it is. So we have one tap right there, and then we have another tap right there. We now have a line that comes across, all right? And on the next tap, which would have been obviously around this area, you can then make the decision yourself if you want to buy from this trend line back to the upside, which would be something like this. Whoops, say something like, and then take out this top and try and hit something like that. It's up to you what risk to reward you want to do. Let's just say you wanted to do a 2 to 1. So in order to get back up to this point here, you need to have a stop loss on 8 pips for gold. This is gold US dollar. Or if you wanted to sell the trend line, you could either sell on the break, and again say stop loss just above, say from this week. If you wanted to hit, you could either hit this point of interest, so this low here as your target, or as it's done here in this image, sold all the way back to the bottom. So it's took out this liquidity and it's took out this liquidity. So using that as an example, you can use that anywhere, any time frame. You know, I'll tell you what, let's swap. Let's go with another time frame. Not another time frame, another pair, for example. So let's just say the 15-minute. So what you could do, there is 2 taps here. So obviously the markets are closed now, it's the weekend, so we're looking for a tap here and a tap here. So if I was to draw my circles, we're going from the top of the wick there and the top of the wick there. Okay, and then all you do, you get your trend line, which is what you want. You go from the top of the wick to the top of the wick, and then what you will either wait to do is wait for it to, from here, okay, get to this point, and then either sell, come back down, start to look for points of liquidity, or you could catch a buy up to the top, wait for a retest and buy, and then aim for that liquidity right there. So that is nice and simple, a trend line break. Now as you go, let's just pick another random one. As you go on the higher time frames, it makes life so much easier. Okay, so here, these have just been some of my points of interest for some trades this week, looking for some buyers, but ignoring all that, okay, we're looking for a minimum of 2 touches. So obviously, ideally, the more touches you have, so 3, 4, 5, etc., the more respected it is. So we're going to go from the lowest point. You can either go here, but it has tapped in to these others. Now, yes, okay, it has come down a little bit, but you know, it doesn't have to be perfect. The market is not perfect, and it does tend to just have little, you know, doesn't quite tap into areas, so it's not perfect. Kind of like this, it's not tapped in perfect. However, if you had a reasonable stop loss, you still could have made that, etc, etc. But following the trend, look, it has tapped in numerous times. Okay, and again, you can either sell. So we got 1, 2 taps. You can either sell on the next one, buy on the next one, sell on the next one, buy on the next one. That is up to you to make your own analysis. Or, you know, as it's coming down this area here, so you have all these taps. So you got 1, 2, 3, 4 taps. We had a break, we had a retest roughly to this area, and then buy, and it's took out all of that. So let's just pick another one, random one. Let's just go with, I don't know, AUD again. Oh, this is a good example actually. So this is the 4 hour. As you can see, right, we have been going up. This is one I drew this week, right, to catch for a sell. So we've got 1, 2, 3, almost 4 touches. Can you see this trend here? So we have gosh, where's my circle gone? We have an uptrend forming in this section here. Okay, we've got our 4, 5 touches. It's broke, so it would have broke. You could have sold to either take out this liquidity, come tapping in down here, which it almost did. You know, I mean, I wouldn't have gone all the way. I'd have just tapped into somewhere here, which eventually, following the dotted line across, or if I just do this, we tapped in and we would have hit TP. So if you'd have sold, if you wanted to take that risk and take the sell all the way down to this level here, oh good gosh, and let's just say you wanted to hit a 2 to 1, you could have had a 24 pip stop loss, right? Stop loss above the EMA for a bit of safety, and you would have hit a 2 to 1. Or if you wanted to keep it nice and tight, like a 15 pip, 10 pip, you could have hit a 3 or 5 to 1. Okay, so now let's use this as an example. So we've got our lower low, lower high, lower low forming. So we want to draw our trend line across here. So now potentially we want to be buying as it breaks this trend line here, right, from these 2 tap-ins. We want to break that, potentially look for a buy to take out this high, if not the other high. Or again, depending on your analysis, you can either sell back down to the sell side, back down to this liquidity. So it all depends on how you assess it, but that is the simple form of using trend lines. So again, I'll just do something like this. So let's just say we've got a downtrend like this, right? You would draw, where's my trend line gone? Good gosh. From this point here, doesn't have to be perfect, but just roughly, so it taps in as many times as you can. Okay, so we've got 3 taps here. Now it's obviously coming down, you know, so that means it's a downtrend. If now it starts to tap into there, you can either buy up to this level here, hold a buy up to this level here, hold a buy up to this level here, and that is basically all you are doing. So then, like say you put your buy in, you put your buy in, you put your buy in for your TP, so you can have 3 TPs technically, deciding on where you want to go, your stop loss. And then as the market starts to shift and it breaks through this trend line, you might get a couple of pullbacks on the way up. But that is basically from a downtrend looking for a buy, or let me show you an uptrend. So exactly the same situation. So we've got our lower low, then we've got our higher high, higher low, higher high, higher low, higher high, and so on. let's say it's just to about there. So we can see our market structure, higher highs, higher lows. We get our trend line, and we go across, and we can either then look for a sell as he gets back to here, back down to take out all this liquidity at this levels, or you can look for a buy as it goes past. Okay, it depends how you want to trade. You could draw the trend lines from the bottom and look for a sell back down to the downside. It all depends how you assess it in the long run. So it's like here, for example, you could now be thinking, oh, okay, it's tapped in, I might want to sell again, you know, as it's respected this line so far. I might want to sell, come down, take out all these tap-ins with the wicks, the liquidity, or I might want to buy on this trend line and head over to the top. Let's just pick another random one. Let's just lower the time frame a little bit. So here, oh, actually, yep. So here, right. Let me find a better example. Actually, I'm not a fan of these examples. Right. So we have now got, as we can see here, we've got an uptrend. It's above the EMA. Right. Let's see if we can get maybe some of these tap-ins, 1, 2, 3, 4, and just see what happens. So let's just go from this lowest point here. Let's just draw, say, to there, and we have our trend line 1, 2, almost 3, 4, almost 5 taps. As this market now comes down to this level, we can decide, you know, it's not making that push to the downside, so I'm going to buy back up to here, or, you know, if it does start to push down, we can look for a sell down to some of these levels. Okay, so that is a simple strategy, just using trend lines. It's nothing fancy. You know, if you look on my 4 hours, it's so simple to do. I mean, 1, 2, 3, it hasn't tapped in again. 1, 2, 3, 4 tap-ins. So again, you can decide here would be a perfect scenario. You could either decide for a buy as it breaks this level, stop loss, and then target some of these highs where you want to get to, or if it breaks down here, you can look for a sell to some of these levels down below. So we've got like a level there, and it all depends where you want your TPs. Ideally, you want to buy above and sell below. That is probably the easiest way to do it. So here, obviously, 1, 2, 3 tap-ins. We've broke past a little bit. If we go to the smaller time frames, this is where you need to use your analysis. And we've had a break and retest. So now potentially you could be looking for a sell to the downside. Again, to where all your support is, to where your levels are, to where your touches are. But that is a simple strategy using trend lines, you know, to determine a trend, which way you want to go. Some breaks. So these are just a few I've been using recently trading gold. So we've got a tap, almost a tap, 2 taps, 3 taps. We had a break. So again, like I've literally just said, you buy above and you sell below. So up here, let's say if it breaks this trend line now, as it comes down, say we want to sell to that downside, potentially taking out some of this liquidity down here. So that is a nice and simple trend line with breaks, retests, but yeah, nice and simple, easy to do.